Hey everyone, welcome back to the channel, your number one source for income-oriented investing. And today we're going to look at 4 brand new covered call ETFs, 2 on the US stock market, 2 on the Canadian stock market by Invesco. So Invesco, very popular because they are the architects of the Qs, right? QQQ, which is basically the NASDAQ 100. So they're the architects of that index, which you know is very dear to my heart. I love that index. Top 100 stocks on the NASDAQ, not including financial. So they launched 4 covered call ETFs, and obviously they're going to launch a NASDAQ 100 covered call ETF. So they launched one in Canada, one in the US. So the one in the US, the stock symbol is QQA. In Canada, it's QQCI. They also launched an S&P 500 equal weight covered call ETF. So that's really the unique part about it. It's not the S&P 500 market cap weighted, it's equal weight. So we'll take a look at that after. We'll do some comparisons, how the equal weight index did against just a regular S&P 500. But here it is. RSPA is the stock symbol on the US stock market and EQLI on the Canadian market. So let's do a deep dive into the NASDAQ one first. So in terms of strategy of the uniqueness of it being a covered call ETF, it's not very unique. It's actually, I would put it in the category of a very basic covered call ETF. They do use equity linked notes to get their exposure to the options. That is pretty much what JP Morgan does, JP and JEPQ. So I kind of discussed that with Hamilton Rainer. There's a lot of, I think, misinformation about there that adds risk. I don't feel like it adds risk at all. It's just another way to write your options or to do the covered call. So I'm not going to look into that further because I think it's a waste of time thinking about that. But let's look at the management fee. So it's actually 0 till end of the year as a promotion, but then it goes to 29 basis points in the US, which is really, really low for a covered call ETF. The Canadian one, by the way, I think is also pretty low at 34 basis points and also 0 till the end of the year. So 2 distributions have been declared for the US one at about 41 cents a month. These are going to be monthly distributions. The yield is about 10%, guys, 10%. For both of them on the US stock market, on the Canadian one. The Canadian one, only one distribution came out, 16.8 cents. You do the calculation, it's about 10% yield for both of these. So remember, again, the only difference is QQCI is the Canadian listed one and QQA is the US listed one. So pretty basic if you ask me in terms of strategy. It's really too early to tell if the distributions are going to be very consistent or not. I know that's a very big concern for many of you, especially if you're living off the income, but it looks like they will be from the first 2. So what could we compare the Invesco QQQ Income Advantage ETF to in the US? Well, I think the most basic comparison, or what it reminds me the most, is the Goldman Sachs NASDAQ 100 covered call ETF. Stock symbol is GPIC. It has also consistent monthly distributions, approximately 10% yield. It has the whole NASDAQ 100, unlike JEPQ. I know you're going to ask me, what about JEPQ? Well, JEPQ is not exactly the entire NASDAQ 100. It looks like this one is. That's why I'm comparing it to GPIC. If we do a comparison, QQA, total return comparison, QQA versus GPIC, you see that it's pretty much very, very, very similar. Obviously, it's only been out since July, so we don't have much data, but you see the total return is actually a bit higher on GPIC. It's outperforming it. On the Canadian stock market, what can we really compare QQCI to? Well, there's only one. It's QQCC, right? We're going to compare it to QQCC, not QQCL, because there's no leverage on QQC, this one here. So if we do a total return comparison, you'll see that QQCC is also outperforming QQCI. Is it QQCI or QQCL? I don't even know. I think it's QQCI, right? I'm driving myself crazy with this. Of course, they can't make it clear. I think it's QQCI. So if you compare it to QQCC, do the comparison. QQCC is outperforming it just a tiny bit. Hopefully my face is not blocking it, but you see here it's obviously it's going to be very, very similar, right? They're both NASDAQ 100, but QQCC is outperforming it with, what is the management fee? Even with a higher management fee at 65 basis points. So there you have it. If you're looking for maybe NASDAQ 100 basic, I would put this under a basic covered call strategy. It has a promotional fee. Obviously, it's very, very, very early to tell. There's only been one distribution declared in Canada on the Canadian one, 2 in the U.S. But it looks like, this is going to be very comparable to GPIC and QQCC. But for the moment, they are not actually outperforming, even though they have a low fee of 0. So we'll keep an eye on them. They're definitely, good buy and hold core positions, and we'll keep our eye on those for sure. So moving on to the S&P 500 one. So they have equal weight S&P 500. So it's RSPA. And the yield is about high 9s. It's probably going to be about 9%. So the US one, they declared 2 distributions, one at 39, one at 40. You do the calculation. It's about 9% yield in the 9, something like that. Same thing for the Canadian one. 1 distribution here, 15 cents. You do the calculation. This one's actually a little under 9% annual yield for now. But remember, again, guys, these are very new. So this one piqued my interest because I wanted to find out how exactly does the S&P equal weight do against the regular S&P. So RSP is basically the Invesco S&P 500 equal weight index, right? They just added an A for the covered calls. And if you actually look at what it holds, you basically see that they're doing calls on RSP, right? You see those calls here. So I was pretty curious. So I said, you know what, let's do RSP versus IVV, the equal weight versus the regular. And I was pretty shocked to see that if you go if you put the date really early, so since 2003, the equal weight one is actually outperforming the regular one. I found that very interesting, but a big but here. If you just put any later date, like let's say you put, instead of 2003, let's say you put 2014, then you'll see IVV, or the regular one, is outperforming it a lot. So 2014, and I tried every year like after that. So if you put 2020 or 2018 or 2017, whatever it is, the regular S&P 500 market cap weighted is outperforming the equal weight one. So this is just my personal opinion. I would always go with a regular S&P market cap weighted. But if for some reason you like the idea of more equal weight, which means basically that, NVIDIA and Amazon and Google and Apple, Microsoft, they're going to be less of the percentage of the portfolio, like the market cap weighted one, right? It's more equal weighted. Then maybe these are going to be an interest for you, right? So RSPA, again, the US listed one, EQLI for the Canadian listed one. I tried to do some total returns, although it's pretty early, but to tell again. But just like the NASDAQ 100, let's do RSPA versus GPIX, right? So GPIX is basically the Goldman Sachs, which is the S&P 500 basic covered call ETF. If you do RSPA versus GPIX, right now RSPA is actually outperforming it by a little bit, 4.48 versus 4.30. And if you do EQLI versus USCC, which is just exactly like QQCC, but the S&P 500, you see that EQLI is not outperforming USCC. So USCC, which is the market cap weighted S&P 500 covered call ETF, is beating it. So that is pretty much it for the review of these 4 ETFs. So these are definitely going to be added to my monthly income landscape video because they are diversified, they're index based. So just more choices. I know we have so much more choices, but the most interesting thing about this is definitely the lower management fee, if you ask me. For these ones, they have 0 till end of year. So these, especially the NASDAQ one, QQA, QQCI, this is basically if you're looking for a basic NASDAQ 100 covered call ETF. Could be very comparable to GPIC in the US, QQCC on the Canadian market, and maybe the S&P 500 ones, if for some reason you like the idea of equal weight, it could be useful for you as well. I personally will always go with a market cap weighted. I always want the bigger, most powerful companies to have the most percentage in my portfolio. That's what I feel is one of the strong points of an index market cap weighted. You're always sure that your portfolio is geared towards the biggest companies, and it's rebalanced constantly, where this one is more equal weighted, right? So, but hey, if you're into that, then maybe RSPA on the US side and EQLI could be a good addition to your portfolio. So hit the thumbs up. I would really appreciate it, guys. And of course, if there's any new covered call ETFs, we're always going to cover them on this channel. And that's it. See you next time.